I taught last night that you can look for inversion levels. If you extend the fair value gap in time, look where the bodies are collected inside the fair value gap. It trades right back up to this candle's low, does it here, hits it, hits it, hits it, hits it, breaks lower. Goes exactly where I said in a tweet on Twitter, the hourly fair value gap. There's 5 handles there. So 10 handles offered without really expecting a lot in terms of risk. There's risk every time you take a trade, obviously, but in terms of movement against the idea that once I tweeted it, very little fluctuation or what would be considered drawdown. The market then rallies, returns back up into the area of what? Let me make this larger again. It returns back to this pool of liquidity there. Then it comes right back down into this right here. Take this off. This candle here and this candle here is one order block. An order block has nothing to do with the depth of market or level 2 data. It has nothing to do with actual orders. When I say it's an order block, what I'm saying to you is the algorithm refers back to this as an order block. It has nothing to do with mitigating. Order blocks don't get mitigated, okay? The market, when it trades back to this level here, you want to take the opening price, extend out in time. I hope you guys like this. I'm having fun today. Hope you're learning something. Give me a tweet and tell me if you're having fun. All right, so this order block, okay, this run lower and then shift in market structure. Where does that occur? Right there. That candle right there. It's a shift in market structure. What took place? The sell stops or sell side liquidity resting below here has been purged. So if we take this level here, put it right there. I told you when we were here to put that level, the blue shaded area, on your hourly chart and denote that. If it was up here and I tell you down here, where's my bias? Down. How far? To that fair value gap. Once it hits it, what do? You log it. Does it offer 5 handles? If it does, you annotate your chart and you say, this is what I seen, and you put in annotations like you observed it with foresight before the fact. And by doing that and putting it in your chart, technically, if you're going to be highly critical, you're technically lying to yourself in your annotations because you're giving yourself positive self-talk like you saw it coming. When you look at your charts on the weekend and you refer to your annotations, what's actually happening is it's very aesthetically pleasing to see positive self-talk in your charts, but it's also subconsciously reinforcing the positives of what it is you're supposed to be retaining in price action. And you're teaching yourself subconsciously to remember these things as what? Worthwhile endeavors. Not, I'm afraid that I'm going to get it wrong. You see what just took place there? There's a subtle shift. That paradigm shift is required for people to filter out negativity. But this down close, these two down close candles, that's an order block. The algorithm, what's doing is once this shift in market structure occurs here, like it does right there on that candle, right at that moment there, the algorithm says, okay, I need to reprice higher. It's going to start booking price higher. This return to this order block, the market will want to do that. Once it does that, it accumulates buying opportunities. Let me say it better. It provides smart money to accumulate long positions when it returns to this. The algorithm is not waiting for smart traders to buy, and their buying is not propelling price higher. It's going down there based on time. It goes down to it here, pulls away from it, and goes down to it one more time. It's spending time allowing individuals that are privy to what I'm teaching you, what I'm showing you. There are people that are waiting for this opportunity. That is what they're paid to do. They are bank traders. They are not JP Morgan traders. They're not Goldman Sachs traders. They're at the bank. But this run here, did it take out that high? On this run here, away from the order block, when it has a shift in market structure on that candle right there, when it moved up, did it take out that high? No. What did it leave there? Buy side. I was talking to you earlier, and you'll hear it in the recording, you'll see it in the recording. I mentioned that there's buy side here. Be mindful of that. Okay, and I went back to my conversation. The market drops back down into the order block. The algorithm offers the opportunity for traders that are looking for it to get in. Reprices higher, rejection block, retraces back down to the order block. Once more, what's it doing? It's allowing smart money to accumulate inside the order block. What else is it doing? For supply and demand, folks, fasten your seatbelts. We're cutting through some candles. Oh no, we're going back into that area of inefficiency. It was inefficient in what? Sell side. It went up. It offered it here. Okay. Is this balanced? This range here, is this range here balanced at that point? No. It's only balanced when it comes to it and leaves it. Now it's a balanced price range. This is an entirely different endeavor of running out liquidity that's formed here. It does not cancel this out. If you've gone through my core content, I teach you the PDRA matrix, and there is a 20, 40, and 60-day look back. And there's a 20 and 40, 60-day cast forward. The algorithm refers to things in that scope. But for the folks that's been here for a while, this is already starting to make a lot of sense to you, and your gears are turning like, oh my goodness, I see it, I see it. Right. It's going to keep repeating too, every week, every day, and it won't stop. I'm not changing anything. Okay? It will not stop working. It will not. Trust me. The markets will cease to exist before this stops working. Period. If I believed by making it public it would change or stop it, you never would have heard of me. So it trades down into the old fair value gap. What is it offering? Sell side again, here, and the order block. So how many factors do you have here leading to the likelihood of these relative equal highs, much like they were over here? What's above here? The same thing we have here from a narrative. We have buy side. What did price do from here? Drop down to what? To that low. Why did it do that? It took out sell side. Why would it be advantageous for the algorithm to reprice all the way down there? You're trying to tell me that only short sellers came in here. Nobody bought. And that's what drove price down exactly to the fair value gap that I outlined beforehand. So every trader out there knew the fair value gap. You all just discovered it this year. My mentorships students learned about it in 2016. I've been using it for 26 years. When they want the market to go to a price level, it's going to that price level regardless. Regardless of how many buyers and sellers there are. Why would it be advantageous for this level to be taken out? Because it's allowing traders that would be looking for higher prices, keying off of that discount array, which is the fair value gap on the hourly chart, that blue shaded area down here that I tweeted beforehand, before it even went there. Look at the turning point of that. Is that not beautiful? But this movement here was the catalyst that sent us up into the buy side liquidity that I talked about in this live stream. That's where it's going to go next. What does that mean? It's not going below that low. Your focus was placed up here. Did it not do it? It did. Is it a big deal? No. But then we run from the order block up to and through that buy side liquidity. Runs above it, comes back down, works inside this range here. What's this down close candle? What's this right here? It's the same thing this is. It's an order block. But this is an order block. Okay, it's a down close candle prior to the change in the state of delivery, which is occurring right at that opening price. extend it out in time. As soon as that price is touched and crossed to the upside, that is equivalent to a market structure shift. At that moment, this entire range here becomes sensitive to future returns to it. And I'll explain. So down close candle, displacement to the down, to the upside. Watch that opening price. Why is the opening price? Well, because there's no wick. Well, why did you use the opening price down here, ICT? Didn't think I'd get back to that, did you? Why do you do it on the wick? Because whenever it's a short little stubby wick like that, I just immediately go right to the opening price. The hard and fast rule is if it's a really little small little wick, just go to the body's opening. Market trades down into it here. Look how much around the midpoint of that candle, which was mean threshold. Half of a gap or inefficiency is consequent encroachment. It's the midpoint. If we have a order block, that's not a gap. That's not a fair value gap. It's a specific range in one candle. You split that in half, that's mean threshold. Look where they're going right here with these candles. Boom, half, 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 half. And then breaks higher. What's occurring right on this candle? Let me zoom in here because I want you to really get this. When we leave this consolidation inside this order block, okay, it drops down into it here. Mean threshold is half of the order block, so half of this range. And I'll show you that. This is what you want to do with your fair value gaps and what you think is an order block. So 40, 27 even. Okay, 40, 27 even. In my mind, I'm watching on a bullish order block, I'm watching the high to the midpoint. I want to see it show a willingness to support price, preferably hit it and quit it and run the other direction real quick. That's what I'm really looking for. But if it starts doing this, and as long as it's respecting that midpoint down here, I'm okay with it. I'm more specifically going to be watching if it starts to consolidate. I'm going to go in with like 6 contracts. I'm doing my typical go in, I buy 6 contracts, and I'm going to try to parlay it up and build a bigger position. What would I do? In this instance, using the order block, I'm going in right there at that price. I'd be going long on the first return to it there. So I would go long 6 contracts there. As it's digging down, I'm going to watch. Does it want to go to the mean threshold? Mean threshold is half of an order block, or half of a breaker, or half of a mitigation block. And go back through my core content and you'll see all that stuff. It's on the YouTube channel. Then I would buy 3 right here on this candle as it hits the mean threshold. So now would be long 9 contracts. If it runs like it does here, and then one more time pumps into it one more time, then I'll do my one last contract, and I'd be long net 10 contracts. 6, 3, 1. Hoping that I can get the little wick through, the midpoint, trusting that it isn't going to go the other side. See, you're thinking, how do you know, ICT? Didn't think I was going to know that, did you? How can you trust it, ICT? Experience, knowing that it's likely to do what I'm explaining here, and also being comfortable with being wrong. Because I can be wrong and be profitable. I can be right and be not as profitable as I should have been. There's a gray area where experience dictates the outcome. And I don't make any sugar-coated claims to make you not understand. It's going to take you work to study this. But over time, you'll see it, and time does its work. But when we see this range here, the midpoint of the order block, once it leaves it, okay, once it leaves that, what's this candle right here? This is a propulsion block. It's an order block within this order block. So it's a nested level. I love this formation. I love it. Let me show you why I love it. What's the opening price? What's the opening price on that candle right there? You should see it right up here. 4029.25. Okay, 4,029 and a quarter. That price to its high, right in here, that is one of the most sensitive bullish order blocks, responsive quick, sudden, like you want to see a dynamic movement, it's going to really do it on this. Like, show me the order blocks that work. Well, here's that lesson. This opening price to its high, that is the absolute most sensitive area in order block theory. What do you see? What's the opening price of this candle? 4,029 and a quarter. It goes through it. It leaves it on this candle. Does it not? Yes. The next candle we open here. What's the low of that candle? You're looking at this price right here. What's the low? 4029.25. Wait a minute. Wait a minute. Deja vu. Something different here. No, it's exactly the same. The opening price, 4029.25. Now I know, pick your jaw up, okay? Pick your jaw up. That again is exactly what I taught you in those core content lessons. Those videos were produced in 2016. It's logic that I coined in 1996. It's never been in any books. It's never been taught until I released it. You cannot improve upon perfect. You can't improve upon it. It doesn't fluctuate. It doesn't fall short of it. It goes right to the tick. And it does what? It delivers exactly the logic I teach you for a propulsion block. The run in price here, you have several things you can look at. You have the buy side relative equal highs here. Take this off. I'm having too much fun now. You guys asked for these live streams. Now you're going to be killed by them. Don't get on ICT. Don't get on I need to have a marriage. So we have buy side here. And also, what is the highest? Look in here. Look in this area here. What is the highest closing price? What's the highest closing price? Right there. I'm going to walk through the PD array matrix with you, okay? There. And what else do you have? What's the highest high? Right there. So this high, what have I taught you about that? Wicks are gaps. What? Wicks are gaps. Midpoint of that gap is consequent encroachment. It's 4,036 even. What is the closing price on that candle? 4,036 even. Yes, there's a small little wick. I don't care about that. I'm caring more specifically about the bodies, because the bodies are going to tell you the narrative. The wicks are where the damage is done. The bodies are what I'm looking for. That's telling me the storyline. What's the opening price of the next candle? 4,036 even. Can you improve upon that? No. What happens after that? Recedes and goes lower. Does it offer from this point here, buying into the propulsion block, from here to the first rejection block, right here, that's the first of your premium arrays. Does it offer 5 handles there? Yes. Why do you think I've been telling you 5 handles? 5 handles is all over the place intraday. It's all over the place. There's so many opportunities to get that. It's very forgiving for folks that miss a move. You can find it again if you're using a 1-minute chart. Oh, ICT, I wish I could just be able to afford to pay my utility bills a month. Well, start mining this, and you might be able to do that. I can't promise it, but you might be able to do that. Let's go back to the propulsion block. Right in here. What does it leave? What is that? Let me do it this way so you can see it. It's a fair value gap, isn't it? How do you know it's going to stay open? The propulsion block. This shouldn't stay open. It should stay, I'm sorry, it should stay open. It should not fill in. This would act as what? A breakaway gap. So if this is breaking away, I'm going to expect what? Price delivery to be more bullish candles, very little retracement, and maybe one or two down close candles. Everything else be what? Bullish delivery. Buy side being offered. How many down close candles do you have from the propulsion block to the consequent encroachment of the wick? You have one down close candle. Why is that important? You need to know the difference between signatures that are going to be favorable for you. If you start seeing a lot of consolidation and down close candles forming and booking in a price run that you're in, chances are you're probably going to get a retracement and come back on your stop loss, or it's not going to go in your favor anyway. So I'm looking at how does price continuously deliver. Is it giving me bullish candles? Is it staying bullish each time? With the exception of this candle here, every candle was bullish. And I'm not worrying about all the little whipsaws back and forth because I'm not going to ram my stop loss up there theoretically because I want to see it do what? I wouldn't even roll my stop up until this short-term high was taken out because above that is what? A very small pool of buy-side liquidity. Buy stops. Anyone that's short, they would have trailed it from here to here. And then we move back into consolidation. And we're entering what time of day? Noon. That's lunch. I teach that you most of the time you're going to be squaring your position before noon. I'm not saying that I don't trade in lunch. I do. I have done it. But as a developing student, you don't want to be doing that because you don't know the characteristics that are part of that.